it's been said for many years that if the U.S. economy gets a cold, the rest of the world gets the flu. Now, you can argue where the U.S. economy is today, but it's probably safe to say it at least has a case of COVID. And the rest of the world, to me, doesn't seem to be reacting to that. Let's talk about that. Welcome to another edition of the Marty Chronicles on the Conservative Take platform. Thanks for joining us as always. I'm Marty Nalitz. Got somebody with me that hopefully will be able to clarify some of the things that I just brought up. David Peterson is an attorney, certified financial planner, and until he retired this year from Goldman Sachs, was fortunate to literally be able to help thousands reach their financial goals in retirement. He is retired now. I'm bringing that up because I want to make sure you understand he's not looking for clients, and none of what we're about to talk about should be construed as financial advice. It's informational. If you know me, you know that's the best you're going to get, and don't take any financial advice from me. David, welcome. Thanks for joining me.
Thanks, Marty. I appreciate it.
Yeah, looking forward to getting into this. A short while ago, we got some of the news that you had been waiting for, everybody had been waiting for all day from the Fed. We'll get to that in a second. Where I want to start is you put together a chart, I think today, kind of putting together the GDP, gross domestic product, and inflation rate for a whole bunch of countries, starting with the U.S. and going through Western Europe, certainly China, India, and countries in Japan, countries in that area. And what's interesting, you were careful to note that you might not be accurate on all of the GDPs, but you felt comfortable that you were at least 90% in the range. Correct. And in there, everybody knows today, this is common knowledge, they're pegging our inflation rate at 8.6% in America. And at the same time, we're coming off a quarter of negative growth. Now, correct me if I'm wrong, because you're the expert, but everyone wants to know if we're heading into a recession. Technically, a recession means 2 consecutive quarters of negative growth.
That's correct. That's correct.
Oh, okay, good. So I bring this up because as I look through your list, Western Europe and a lot of those countries were very similar to where we were in America. What's interesting to me is India and China both show over 4% growth, and China shows, like Japan, a very low rate of inflation. Does that mean anything to you? Am I reading too much into that? Am I concerned about nothing?
No, I think it's interesting, though. We're presented all the time with we have the best economy in the world and that sort of thing. And if you do a comparison, it's really not true. We have the second highest inflation rate. Great Britain's is a little bit higher than ours. But even if you look at Italy and Germany, their inflation rate is lower. And in that, with what you're referring to, Japan was the only other country that had negative first quarter GDP. They were down 0.5%. By contrast, we were down 1.5%. So that is a little bit concerning to me, and clearly we're not leading the way here.
Just a little while ago, the news that you and many others had been anticipating from the Fed came out, and they did raise their rates. Lead us through that.
So I talked about this earlier this morning, and I kind of put the odds of the Fed raising the rate 75 basis points to about 55%. They had previously indicated that they were going to raise it 50 basis points, and 50 basis points is like 0.5%. But with the inflation news that came out on Monday, that didn't seem very likely. And then I also put the odds at 15% that they would go a full point. But the retail sales numbers today came out a little weaker than expected. So I don't know if that played a role or not. But they did raise 75 basis points. And it's always interesting when the Fed moves because the market becomes very volatile. For a while it soared. Then it actually went negative, and then it went up again, and right now it's fairly positive. I wouldn't read a whole lot into the market's reaction today, because it's always volatile when the Fed announces their change. So they did raise 0.75%, 75 basis points today.
And that's the biggest increase in almost 20 years, right? I mean,
yes.
Or almost 30 years. Almost 30
Almost 30,
years.
1994.
Right. So what would you anticipate that doing for America or to America in the short term?
In the short term, not much. It really does take a while for interest rate changes to permeate their way through the economy. Now, I think it's important that people understand what the interest rate is, okay? The Fed only has control over one interest rate, direct control over one interest rate. Banks are required to have reserves, cash reserves on hand at the end of every day. Well, if they don't have those cash reserves, what do? They borrow from other banks. If they can't borrow from other banks, what do? They go to the Fed. So that's the rate that the Fed charges, is the overnight lending rate. Okay, and that's what you see. But historically and traditionally, when the Fed raises rates, rates typically go up with the Fed raising rates. Now, sometimes they go down, and we get an inverted yield curve where long-term rates are actually lower than short-term rates. And when that happens, that typically presents a recession. So short-term, I don't see much. The other thing, though, is that the Fed has been doing this quantitative easing we kept hearing about, where basically they were buying securities, which is buying government bonds, which puts more money into the system. And that helps lower interest rates. The way you kind of need to look at bonds and interest rates is like a teeter-totter. When interest rates go up, bonds go down, and when interest rates go down, bonds go up. So when the Fed was doing this quantitative easing, they were buying bonds, pushing the price up, pushing interest rates down. And so they've not only have they stopped that, but they have now recently, as of this month, switched that and started doing quantitative tightening. So you hear about the Fed's balance sheet. They're starting to shrink the Fed's balance sheet. And I think that will have a larger impact short term. And it does mean that interest rates are definitely headed up, which is really the only way we can stem this inflation that we have.
Do you anticipate more of the interest rate going up, or they did this fairly radical move, increasing at 75 points? Do you think that's going to be set like that for a while? Will they have to wait a while to see the impact that has?
No, they're going to have to continually increase it for a while. The fear, though, is that they overshoot it. And that's where it's very hard because, like I said, we're not going to see the impact in the economy for a while. I mean, that's kind of a given. And so they're going to keep doing this, and all of a sudden we're going to see the impact. And is it going to be the right impact? Is it not going to be enough, or are they going to go too far? And truly, the fear is that they go too far and push us into a deep recession.
Do you have a serious concern about that? Do you think that's a possibility?
Well, normally I wouldn't, but they got so far behind the curve, and everybody knew it. This isn't Monday morning quarterbacking.
Right.
You know, everybody was saying, the Fed's behind the curve, the Fed's behind the curve. And what did they do? At their last meeting, they raised interest rates 1/4 point, and they were still doing the quantitative easing. It made no sense whatsoever to me. So I mean, again, it's not Monday morning quarterbacking. So they've totally missed it. So I am concerned that they're not going to be able to put the brakes on this quickly enough, and we are going to see a recession.
One of the concerns that you hear from people, especially with regards to inflation, is I'm going to throw some figures out here. I'm not saying that this is true. I'm just using this for the sake of discussion. But people will say, over the past, 2 years, the federal government, the Fed, whoever, they printed $10 trillion. I'm pulling that figure out of the air and put it into the economy. Naturally, you're going to see inflation with that. Do you think that's a fair assessment?
There's no question about that. And again, this was a situation of what do you do? We had COVID, we had the economy shut down. Under Trump, we passed this huge bill that flooded the market with money, flooded the economy with money. Right. And then, the problem that I have is, okay, so let's back off. But clearly, we started to see the economy recovering. And then we passed this $1.9 trillion bill too, which the analogy that I'm giving is we kind of had a smoldering fire at this point and we poured gasoline on it.
Yeah.
So I think the things that have really led to inflation are, number one, Fed policy, just pumping too much money into the system. Okay. Secondly, was too much stimulus, and third, honestly, is the administration's hostility towards fossil fuels. And it's you hear it's the greed of the oil companies. You hear it's Putin's fault, but look at what Biden did. I mean, and I'm going to be a little radical here, okay, if you don't mind. But
you're in the right place.
But Biden has driven up oil prices significantly, and he could change that with the flip of a switch. I mean, it would be so easy. Open up the Keystone Pipeline, open up drilling, open up Anwar. And what would that do? That would drive oil prices down. Now, here's where I get a little radical, okay? I honestly think Biden is funding Putin's war in Ukraine. Okay, so we stopped importing Russian oil and Europe's going to stop importing Russian oil. China and India aren't. Right. So that has kept oil prices high. Putin's making a ton of money, a lot more than he would have if oil would have been, say, $60, $70 a barrel. And
of course,
and that's just funding the war.
David, I don't think that that's really radical. And let me add something else to it, that there's a geopolitical part to that, not just a financial part. You have Russia, China, and India. Probably, what is that, a third or half of the world population, that by these policies, they've sort of driven them. They're not historic allies in any way, but these policies have served to drive those three closer together, and geopolitically, that turns into a problem for us.
Well, in the words of Joe Biden, come on, man, these aren't bad people.
Right.
And they're not bad people. It's the governments that are bad.
Of course. I just saw today an announcement a little while ago that the administration says they're going to send another $1.2 billion to Ukraine. So let's focus on Ukraine for just a second. I don't mean the war. I mean the economic fallout. Is that part of what's going on in your mind?
Not yet. I think, war is never a good thing, but it is frustrating for us to send that much money overseas when we have situations like Uvalde and we don't shore up our schools and stuff like that. But that's more of a value that I have about where we should spend our money. But what I think is really going to happen is that we're going to see some impact this fall, because this has driven the price of fertilizer up. Right. And Russia and Ukraine are very large wheat exporters. And, if you don't use anything with wheat, if you're gluten free, well, maybe you're okay. But the rest of the world isn't that way. So I think we're going to see food prices jump drastically.
Well, and something else I just saw today, Venezuela and Iran have entered into an agreement for Iran to send oil to Venezuela, which by itself is a statement. Venezuela has as much oil as anybody else on earth. Yes. And because of their folly, they're having to import it. But again, we have this renegade country, let's say, in the Middle East, shipping oil into our backyard as a result of these policies that have gone on. Look, this guy, our president, he's had a conference that he couldn't get other countries to come to. It was a conference of American states, and he couldn't get a lot of the countries to even show up to it.
Mexico.
Our
next door neighbor.
Yes.
Yeah.
Geopolitically, I'm just saying these policies, these problems hit us all in the pocketbook for sure, and they're going to get worse maybe. But there is a real serious geopolitical part to this that I don't think can be overstated.
I agree with you. And here's the other frustration I have along those lines is, so let's assume that Biden goes to Saudi Arabia and they agree to increase production of oil. Okay. So we see the price of oil going down as a result of this increased production. Well, how does this impact the Green New Deal?
Right.
Their oil isn't any more clean than ours. Plus, you have to ship it all the way here. Wouldn't it just be easier to go in Oklahoma and Texas and get it there? The one thing I do want to say about oil prices, and that has really been a problem, as we all know. We see it every time we go to the pump. I would not be surprised to see oil prices start to drop a little bit right now. And it's not because of supply. I would love to see them drop because of an increase in supply. I think we're going to have a decrease in demand because people are going to be driving less. And, you're going to stay home and eat. You're not going to go out to eat. So that's gas. So I think we could see a little bit of a drop in the price of oil just because if we do head into a recession or a slowing economy, let's even assume we're not in recession, that GDP bumps along about the flat line. And that's a slowing economy. And I think in a slowing economy, we're gonna use less energy, less oil.
There's no question. Where I live in Southwest Pennsylvania. I live almost on the border of Pennsylvania, West Virginia, and Ohio, where they come together. And I lived in Colorado for 30 years. And the difference in sort of the mindset of driving between Colorado's so big and wide open. Mm-hmm. Pennsylvania is different. If you tell someone you're taking a job 30 miles away, here, you're nuts. In Colorado, it's the way it is.
It's the way it is.
And my point is, here, where I live, even now, I know people that they push everything together. I have to do my grocery shopping, do this, that, and the other thing on one trip. Because I know people who are saying I can only drive 2 or 3 days a week. That's all they can do. Gas is up to about $5.20 a gallon where I'm at. And that's unsustainable for a lot of people. And you mentioned it, the ripple effect. You don't go out to eat. And even more than that, you would stop at a convenience store or a mini mart before and you get gas, go in and pay your $13 and spend the other $7 on a soft drink, candy bar, whatever. Nobody has change anymore. So it's hitting everywhere and you see it everywhere. So I'm not sure. My point is that's a long way around saying I totally agree with you that I do anticipate prices coming down, but it is because people just aren't driving. They're not going anywhere. So, we have that to look forward to. So long term, let's talk longer term. When you talk short term and long term in economic policy, what would you say the difference is? Is short term 6 months? Is it a year? What is it?
I'd say short term is a year, and kind of midterm is 1 to maybe 7, and long term is 7+. So long term, I'm still incredibly optimistic.
Right.
We're a great country and we've gone through hard times before and we've always bounced back. And I think people that sell the American economy short are wrong. We make errors along the way, but we correct them eventually. And hopefully that'll start in November. But I am very optimistic. And the other thing is, companies are very good at making money. What's wrong with making a profit? That's what drives you into a business. I started my own business. That the reason why was to make money. I mean, there's nothing wrong with that, but I think the left has kind of vilified that a little bit. So long-term companies are pretty good at figuring out ways to get around certain things and to make money. And that's what drives the stock market up. So long-term, I'm pretty positive to be honest, but we could be in for a difficult period. Even I think it's important, like with the stock market, to look back at the last crisis we had, the financial crisis. On March 9th, 2009, the market hit its low. 4 years later, it was hitting new highs again. So we can go through down periods. And even with the fall that we've had in the market, if the market rallies the way it looked before we came on air, we're at about where it was when Biden took office. And if you went back 18 months, people felt pretty good about their portfolio. And here we are flat for 18 months. So, it shouldn't be too depressing or discouraging, I would say.
Well, and again, you know this far better than I do, but the historic trend of, let's use the stock market, the historic trend is to go up. It will lose money, but it always goes back up, or it always has gone back up. So the reality becomes everybody invests for different reasons. So what is it you're trying to accomplish? If you retired 3 years ago and you're living off some part of your 401k in a stock market, well, you might be hurting right now. If you're looking to get in now, it may not be a bad time to get in. Again, not advice at all.
No,
it's just the historic trend is to go up.
It certainly is a better time to get in now than it was 3 months ago, you know. So you're exactly right. The market does go up. And the way I like to look at it is you're like on an escalator that's always going up, but you have a yo-yo in your hand. And sometimes that yo-yo drops and sometimes it drops very sharply. But let me say one thing that I think is a little bit different right now, okay? We have historically been in, and when I say historically, I mean really since about 1982, we have been in a economy where interest rates have fallen. Okay. I mean, I keep thinking, you know, I've refinanced my house and I'm thinking I'll never refinance again. And sure enough, 2 years later, I'm refinancing again. So we have been in a falling interest rate environment. And what happens is when the economy has slowed, the Fed has lowered interest rates. And like I mentioned earlier, interest rates and bonds trade like a teeter-totter. So as the stock market has gone down and the Fed lowered interest rates, well, that allowed bonds to go up. And so that kind of offset the loss from your stock portfolio. Now it's a different environment. With inflation this high, there's no way the Fed can lower interest rates. They've got to raise interest rates. They've got to continue the quantitative tightening. That is going to push the price of bonds down. So if the stock market goes down, bonds could also go down. I mean, there's an old saying that stocks and bonds trade in opposite directions until they don't. And right now, it's a don't.
Yeah. Well, and again, some of those issues about what might happen short or long term, they may be changing in a political sense. We saw literally a historic congressional election last night in Texas, right?
Stunning. Yes. Stunning.
Yeah, a seat that was held, I want to say, for 40 years by Democrats, a overwhelming majority Hispanic border congressional seat flipped to Republican last night, and it wasn't really close.
It wasn't even close at all. Yes, agreed.
And we see that sort of thing happening in the short term with congressional races. A lot of that's going on. Dave, I'm going to tell you something that I am a huge Donald Trump fan. Have been. I think he made some mistakes, especially with COVID, but regardless, I'm a huge fan. And I have to tell you what I wanted to see happen. I wanted to see him run for Congress. I wanted to see him pick out a blue district that he won in the past, which there are many of them, run for Congress there and do what he does best. If we're being honest, in my opinion, some of the problems he had as president had to do with personnel decisions more than anything else. He wouldn't have to be burdened with that in Congress. And I just think it would be his energy, his vitality, and his leadership would be sorely welcome there.
Well, I don't disagree with you, and I am a Donald Trump fan as well. I think part of his issue was personality. He was very abrupt and abrasive. But you know, when the media is promoting Russia collusion nonstop, and we now know that that's fake. The media buries Hunter Biden laptop stories, and we know that that was wrong. I don't blame him for being furious, but he could rub people the wrong way. And I agree with you. I'm a Donald Trump fan. What I always told people is, in 2016, I voted for Donald Trump because he wasn't Hillary Clinton. In 2020, I would have crawled through broken glass naked to vote for the guy.
For sure. And of course, as we speak, we're in the middle of what, in my opinion, is a travesty, this January 6th committee, which is so wrong on so many different levels. It is incredible to me that anybody who calls themselves a Democrat can look at that and think that they're doing something serious.
You know, this is what really bothers me. If I'm a Democrat and I hate Donald Trump, okay, let's assume that. I want this January 6th committee to show that Donald Trump caused an insurrection. Okay,
Sure.
That's what I want. Now, how can I do that when I have 7 Democrats on a committee, 2 Republicans, Jim Jordan and Jim Banks, but the Democrats, Nancy Pelosi, kicks them off in favor of 2 Republicans that hate Trump.
Right.
Alan Kinzinger isn't even running for re-election because he knows he'd get killed. And Liz Cheney is trailing Harriet Hagman in Wyoming polls by 30 points.
Right.
So here's what I want to do is when the Republicans take over, we need to have a special congressional hearing on Hunter Biden's laptop and how it impacted the big guy, what his involvement was. I think we have seven Republicans on that committee, and then we add Alexandria Ocasio-Cortez and Ilhan Omar to the committee. Not that I agree with them in any way, shape, or form, but they hate Biden too.
For different reasons.
For different reasons.
They think he's too conservative.
Yes.
Right. I'm with you on that. So let's go back to kind of the short-term, long-term thing we were talking about. I appreciate all the points that you made. Long-term, what concerns me? Here's what concerns me. It is that the people that are in charge at this moment are children. They're immature. If you look at Joe Biden's Twitter account, you can't convince me that he runs that. Donald Trump, you always knew he was doing his Twitter account. The things that are written on Biden's account, there's no way he's writing them.
No.
Right? So the people that are involved, I don't think you can take them seriously. They're all kids, which by itself isn't bad. But it really brings me to something else I really wanted to ask you about, and that's cryptocurrency. We hear so much about cryptocurrency. Bitcoin, of course, has been getting crushed lately. And to me, crypto, it just looks like voodoo, or something that kids talk about, because everyone I ever see talking about crypto is a kid.
Well, I agree with you. And, if you've known me for a while, you know that I've been opposed to crypto and was dead set against it back when it first was, when it was 5,000, I was opposed to it, because to me, and I've studied it, but I don't understand it. And I have studied it, and I still don't get it. And then there was, for a while there, companies were starting to take Bitcoin, payment in Bitcoin. NFL players received their salary in Bitcoin. Well, maybe I'm wrong, but a currency needs to have some level of stability. Bitcoin is down 60, 70% from where it was. That's not stability. So that's deeply concerning to me, that there's no stability there. And then companies have stopped taking Bitcoin too. A lot of companies, Microsoft, Dell, were accepting payment in Bitcoin.
Right.
Well, they've stopped it, and part of that is because of the volatility, and I think that's going to continue. And it's to me, it's the greater fool theory. Okay, I'm going to buy it here, but someone else is going to buy it there. Okay, I kind of look at gold a little bit the same way, but gold has a 5,000-year history, and at least there's some intrinsic value with gold. It's used in dentistry and jewelry. Bitcoin, there's nothing there. So I don't, partially because I don't understand it, and partially because I just don't see it being used for anything other than a way for criminals and drug dealers to get paid. I just don't see it, and I think it's going to continue to fall. Now, with that said, could I be 100% wrong? Absolutely. I'm the first to admit it. But again, I don't like to invest in things I don't understand, and I clearly don't understand this.
Right. Yeah. Listen, David, we're going to get ready to wrap this up, and I'm going to give you the final word in just a second. I really, as we end this, I want to get your thoughts on here in America, with the numbers that you know today and what the Fed has just done. I just kind of want to get your sense on what you think we should look for in the next 3 to 6 months. Before we get into that, I want to say again, This is not financial advice. This is informational. David is retired, and I'm the type of guy that'll try to stick you with the check if we go to lunch. So don't try to take advice from me. So that said, David, again, 3 to 6 months, your best guess. What do you look for? What do you hope for?
So, boy, that's a tough one because short term, I never like to make predictions. But I do agree with you. This is not financial advice. But I honestly see the market dropping a little bit further. And the reason is because one thing we haven't talked about today are valuations. A way to value a stock is the price earnings ratio. You take the price, you divide it by the earnings, and that gives you a number. And from a historic point of view, past 20 years, price earnings ratios are probably about where they've been with the drop that we've had here recently. But the problem is that I think you need to look at valuations in terms of interest rates. And as interest rates go up, bonds do become more attractive to investors. If I can get a 4% rate of return, totally risk-free, well, maybe that beats an 8% rate of return with risk. So my concern is that valuations are still a little bit too high, because if you look over 50 years, they're elevated. And I think the 50-year period is a better period to look at, because if you look at just 20 years, again, we've had a low interest rate environment. If you look 50 years, it hasn't always been that way. And I think that's the better time frame to look at. So, and on top of that, when with price earnings ratios, even when they get down to where they should be, well, they tend to overshoot a little bit. So the price earnings ratio for the market right now is about 18%. I wouldn't be surprised to see them hit 12, 13%, maybe even a little bit lower before we see a turnaround. But eventually there's going to be some value in the market. I just think we're a little overvalued still, even over the short term. But again, that's my best guess, and that's all it is as a guess.
Sure. And one last thing, you also mentioned earlier that you're optimistic even about the jobs market in America.
I am optimistic about the jobs market. If you look at, and that's a very good sign, if you look at how many people are hiring right now, that's an incredibly good sign. One thing to watch, though, is going to be tomorrow. The new claims for unemployment come out every Thursday. Last Thursday, claims suddenly jumped from 202,000, which is an incredibly low number, to 229,000, which is still an incredibly low number. But that's something to watch. That was a little bit surprising. And so if we see the claims go up, that means unemployment is not going to look or the employment numbers aren't going to look quite as good as we anticipated. And there's anecdotal evidence that a lot of the big tech, the Amazons and the Facebooks, and not particularly those companies necessarily, because I don't want to single them out, but that big tech is starting to lay off a little bit. And so we could see a little bit of a jump in unemployment figures. So that's not a concern at all, but something that bears watching.
David Peterson, thank you so much for your time. It's fantastic talking with you. I look forward to having you back with us again.
Thanks a lot, Marty. I appreciate it. Take care. Okay.
That's going to do it here on the Marty Chronicles on the Conservative Take platform. Thank you.